Hi everyone, a very good evening. You're watching The Money Show, ET Now's Rise with India Primetime segment. I'm Mubina Kapasi, and in this episode of The Money Show, we've got lots lined up. First up, about the loan moratorium. So anybody who's a car loan borrower, home loan owner, you've got to listen up because I will be joined by Bank Bazaar to tell you and advise you on whether or not you should opt for the moratorium if you are okay on your cash flow, if you're still getting your your income on time. So I'll help you make that decision on today's episode of The Money Show. And later on the show, we will be joined by Nikhil Kamath of Zero Dha to tell us about the best way to manage money, to manage your mutual funds amidst this turbulent time. So two co-founders of two extremely reputed companies. So that's what we will be talking about today on the show, an action-packed day right here on ET Now. But let me first start off with the important announcement by the RBI that was last week, and that's with respect to the moratorium. Essentially, the central bank told customers that, look, if you are having a cash flow problem, if you are not getting your salary, if you fear that you may be laid off and hence cash flow could be a problem, you get a breather for 3 months. You do not need to pay your EMIs, be it for your home, for your car, or any other kind of loan that you've taken for a period of 3 months. But you know what we say, right? The devil is in the details. So before, all you borrowers rejoice, take a look at the fine print. For example, State Bank of India's actually turns out that you may have to pay a much higher interest later if you opt for the moratorium right now, which then makes you wonder, is it really worth taking that moratorium? I'm joined by Adhil Shetty of Bank Bazaar. He's the CEO and co-founder of bankbazaar.com, and he joins us right now on the show. Adhil, pleasure having you with us yet again on this episode of The Money Show. Like I said, right, when the RBI said that, look, I'm going to give you all a moratorium, it's only a moratorium, not a cancellation, which means you will have to pay it later on. When the RBI said this, clearly all borrowers were pretty pleased. But then, like we say, right, the devil is in the details. So I want to talk about these details then bit by bit. Starting off first, Adhil, in the next couple of days, a lot of the borrowers will probably be getting text messages from their bank saying, we hope you've got enough balance lying in your savings account because your EMI is up for payment. That's what usually happens, right, in the couple of days gone by and in the days to come. So how does it work? I mean, is it that the moratorium is a given unless you don't opt for it, or is it the other way around, Adhil?
Yeah, Mubina, you asked a number of very important questions. Let's try and take it one by one. So firstly, the RBI has permitted your bank to grant you a moratorium. So you need to get communication from your bank to actually take this forward. So that's firstly critical. Your bank will email you, will message you with how they're offering you the moratorium. The second thing is, when they offer you the moratorium, most banks, not all, are using an opt-in feature. So you've got to respond to them via SMS, or you've got to go to a particular site and fill in your details such that you can opt in for the moratorium. So these are 2 points to note. It's not automatic. Your bank has to contact you, and most banks are offering an opt-in version. Now, once you have the option of opting in, you then have the hard question that you brought up, Mubina, which is, should I take it or not? And that's a tough one, and we can talk through it in more detail, because there are certain customers we're recommending on Bank Bazaar to not take the moratorium, to continue paying EMI if you can. And there are certain customers we're advising to take the moratorium, but try and bounce back in order to not have to pay too many additional EMIs. We can talk about that.
Okay, all right. Yes, and I think that's not going to be a simple yes and no answer. I suppose you as well have made that very clear, Adhil, in your answer, that whether you should opt or not is not a simple yes and no answer. And also, of course, with respect to the opt-in facility, folks, do not assume that your bank will not deduct the EMI, for the month of April, for the month of May. You have to tell them that, look, I want to opt for this moratorium. So just don't sit back. In all probability, your bank may have already contacted you as well via an SMS asking you to follow a particular procedure if you want to opt for the moratorium. All right, and now, of course, to the crucial question. Adhil, State Bank of India had put out a very simple FAQ where they said, look, if your home loan is X, the interest rate is X, this is, what the moratorium will be. It'll be for the next 2 or 3 months. But when you will be deferring, when you will be opting a moratorium for 3 months, that's 3 EMIs, you'll actually end up elongating your loan tenure for 8 EMIs. So Adhil, and SBI is not the only one. There are several banks who are doing that. So Adhil, how does that work? Why is it that I actually end up paying more interest when I'm opting for the moratorium?
A great question. Now let's take this step by step again. Now, if you can pay the EMIs, go ahead and pay it because interest is being calculated during the moratorium. If you do take the moratorium, different borrowers are impacted differently. So like you mentioned with the calculation put out by SBI, other banks have done it. I have written about it on behalf of Bank Bazaar. If you are in the early stages of your loan, such that let's say you've taken a 20-year loan and you're in your first year of your loan, if you take the moratorium and don't pay your EMI, it essentially would result in increase in several EMI towards the end of the loan. So you gave the 8 to 10 extra EMI example with SBI. I think there are various examples. However, if you're in the last year of your 20-year loan, the number of additional EMI will be lower. In principle, right, it happens because the interest component is smaller. The interest component is larger during the initial part of your loan. So if you're in the initial part of your loan, the downside for you is much larger. So we're advising people that even if you take the moratorium because of various cash flow issues, there's a very interesting model wherein if you pay 2.5 EMIs 12 months later, you can actually reduce the extra EMIs you have to pay. So I'll try and make it simple. If you can pay the EMI, continue to pay it because you're going to pay interest during the moratorium. If you can't pay the EMI, it's fine. Make use of the moratorium. It's a good benefit offered by the RBI and the banks. But make sure that you don't wait to the end of your loan. Try and make one single bullet payment of 2.5 times your EMI within 12 months, because that can effectively reduce the extra interest or EMIs you'll pay towards the end of the loan. And there's a number of calculators and tables available which can help make this clear for your particular loan situation.
Yeah, in fact, one such table is also something that's been illustrated by Bank Bazaar. So basically speaking, look at the point at which you are in your loan. Let's say it's a 5-year loan and you've already made EMI payments for the last 4 years. You're just left in the last 1 year, and if you have a cash flow problem, then fine, go for the moratorium. Yes, there may be a bit of an extra charge, but because you are just in the last 12 months, the shorter the period, the better, of course. Just because you are in the last leg of your loan, maybe the bill won't be that high. However, if you are at the beginning of the loan, at the front end of the loan, then you may feel the pinch because the interest is going to be calculated for the entire duration of the loan. So let's say if you've got 4 years left, then it's going to be calculated for the entire 4 years. But Adhil, is every bank doing that? I mean, we just know an SBI that's of course doing this, plus a couple of other banks. Why can't the bank simply just say that, okay, look, there's a 3-month moratorium, and then maybe, in June, July or whenever, you can just pay me the EMIs for the 3 months for which you have deferred?
So, see, every bank is offering you the moratorium and making it easy for you by trying to keep your EMI steady. Now, if you as a borrower can pay those 3 months EMI or 2 months EMI in June, the bank is not going to stop you. So you can go ahead and do it. But I think in this COVID situation, right, where everyone is feeling the pressure, it's unlikely that a borrower would have those 3 months EMI ready with them in June. But the bank will not effectively stop you. I think what the bank is saying is typically people want the EMI to be steady. So they're saying take the benefit of the moratorium. I will keep your EMI steady, and whatever interest accrues during the moratorium, your EMIs will be extended such that you'll pay off your loan. And Mubina, you hit the nail on the head. See, every loan is different. Everyone has a different loan amount, a different interest rate, a different tenor. And there are tables provided, by ET or online. Bank Bazaar is provided, which you can check. But the principle you mentioned is important, Mubina. If you're in the early stage of your loan, you will be impacted more in terms of the number of extra EMIs. If you are at the very end of your loan, you will be less impacted in terms of extra EMIs. If you can pay the money off, continue to pay during the moratorium. If you can't, the RBI and the banks have given you a good benefit. Make use of the moratorium, but try and make one single bullet payment of 2.5 times EMI within a 12-month period. So when your cash flows improve, right, within 12 months, make a bullet payment such that, right, you immediately bring things back to normal and you're not going to pay extra EMIs later. And for your particular situation, do the calculation. Don't assume anything is for granted. Go online, research it. A lot of good publications have put out articles, read it, and try and rationalize within 12 months.
That could actually be a good strategy. Adhil mentioned that consider making a bulk payment once things improve at on your cash flow front. Let's say you even opt for this 3-month moratorium to tide over, and then once things improve, we hope and pray, of course, that things improve soon. Maybe you could consider making a bulk payment to bring down, your principal amount as well, and automatically bring down the interest as well. Then, okay, Adhil, another question that I'd like to ask, and we've been getting a lot of viewer queries as well about this, so I'm going to encapsulate that question into just one. A lot of our viewers say that, we are reading about RBI cutting rates, but my bank has still not cut rates. They tell us, and when I do go and ask them that, listen, why has my interest rate not been cut? And then they'll give you a 25 bips rate cut, or they say, okay, you can move over to our MCLR facility and that will be lower by 0.5%. But the point is, they are still paying 10.2% interest rate, whereas repo is 4.4 now. Of course, you'll have the bank spread, you'll have the markup, credit spread, etc. But still, do you think that if banks are still not offering a good interest rate, perhaps now is the time that a customer should consider refinancing and moving out of the high interest asking bank?
Great question, Mubina. Let me answer this in 3 pieces. So part 1, right, if you're on a repo rate loan, and all loans since October 1st, 2019, all home loans are linked to the repo rate, automatically your home loan rates will come down by 75 basis points when your reset happens. So if you already are on a repo rate loan, right, the benefit will reach you as soon as your reset happens, which happens once in 3 months. So it's automatic. You don't have to worry. As far as MCLR goes, right, the RBI has made a number of measures which will result in MCLR going down. So the bank decides on this every month. So wait and watch to see what happens with your bank's MCLR, because it is expected that basis the repo rate falling and additional liquidity being provided and fixed deposit rates falling, that the MCLR will go down. So wait for a few weeks and see how your bank changes its MCLR. And when your reset clause comes up, which typically happens once in 6 months or once in a year, the MCLR EMI will readjust. Now, to your third point, right, I think in a downward interest rate scenario, you should always be aware of the rates on a new loan. So go online, check what new loans are being offered at, and always make a note of the difference between your current EMI, which you're paying on your existing loan, and what would happen if you refinance, which is your new EMI. It's a very simple calculation. I try and boil everything down to what is my current EMI, what is my new EMI if I take a new loan. And if there is significant saving, right, then consider going in for a refinance and going through the process that's required. If there's a floating rate loan, typically there's no pre-closure. If there's a fixed rate loan, typically there is a pre-closure. And there are a number of online tools available for you to check this, including on multiple sites.
Okay, Adhil, another point that I would like to talk about is credit card loans. Now, I suppose that, what's the position over there? Because again, a lot of our viewers have taken loans on their credit cards, and we know over there the penalty is extremely high. It's almost 41% if you miss out on your credit card payments. What's the status over there? If you could just clarify that for our viewers, because there's still a little ambiguity.
Yeah. So the RBI clarified in its notification that credit card dues would be treated the same as term loan dues. So you do have the option of a moratorium if your bank grants it to you, and that also is on an opt-in basis. So for simplicity's sake, assume that credit card debt or balance is being treated as far as the moratorium is concerned, similar to the process that's being given for term loans like home loan and personal loan. But that being said, Mubina, you brought up a very, very important point. Credit card has a higher interest rate. We strongly advise, and I think the banks strongly advise, that if you can pay off your credit card dues, please do so. Your home loan, right, is at a much lower interest rate. Your credit card is at a higher rate. So credit card users, right, please pay your credit card dues as you normally would. And you will be charged interest during the moratorium. So though the option is also available for credit card dues, right, we strongly advise that you pay your credit card dues as you normally would and do not make use of the credit card moratorium.
Adhil, one of our viewers has actually just written into us saying that we read about this moratorium, 3-month moratorium, but of course, just like many of our viewers, they have paid off their March EMI. So technically, it's just a moratorium of 2 months. Adhil, I believe you had also raised this point. Now, of course, the next EMI will be due in June. But does that mean that the EMI paid in March will be adjusted in June? I suppose it's quite a valid point. And I know, Adhil, maybe every bank will differ in what they're offering to their customer. But, could this be a situation that maybe a borrower could bargain with their bank about?
So, you brought up a very, very relevant point. So if you look at the way this is being implemented, it's offered as a moratorium for EMIs between March 1st and May 30th. Now, typically, right, retail EMIs are collected in the first half of the month because typically no one does a EMI payment in the last week of the month. So by the time the announcement came out, right, all of us had paid our retail EMIs for March. So in effect, right, what has happened is you need to see your bank's particular communication. Most banks are saying is they will implement it for the May EMI, for the April EMI and the May EMI, which means you might only get 2 months benefit. However, some banks have said your March EMI will be applied to your June payment. So I'd say it all depends on your bank's communication to you. Don't take anything for granted. Check what your bank has offered you. Now, the bank typically has sent the same standard communication to everyone. So I don't believe, right, there is too much option to negotiate over here. It is automated SMS. There is a web page in which you go and you enroll for it. You're able to do it for your April and May EMI. But I think one of the asks we had for the RBI is if this could have been done for April 1st to June 30th, given that most of us had paid our EMIs by the time the announcement or the moratorium came out for March.
Yeah, I think that was one complaint that a lot of people did have, that, you came out with the announcement only in the end of March, and by then the March EMI was already paid off. So effectively, it's just a 2-month moratorium as opposed to a 3-month. But thanks so much, Adhil. It was great getting in your take, your perspective after all the research as well that you've done. Folks, this is a little tricky, but you always have plenty of resources, calculators. Bank Bazaar has done a lot of work on this. You could always just log into the website. But, it's always best to go speak to your bank, because every bank has a different policy. Unfortunately, we're still getting a lot of viewer queries trickling in, but we're not going to be able to take that forward. Stay tuned. We'll definitely take this topic up sometime this week, since, it's something that's getting a lot of viewer interest. Well, that's of course Bank Bazaar's Adhil Shetty, and he spoke to us about whether or not you should opt for the moratorium. Let me just sum it up. If you are in the last phase of your loan repayment and if you are struggling with cash flow, maybe opting for a moratorium won't cost you that much. But if you are in the front end of your loan, you've just taken a loan maybe a couple of months ago and you've got a long way to go still, then try your best to just, adjust your finances and pay off the EMIs, because this one could lead to a hefty interest bill.